Hi everyone, welcome back. I'm Ruben Torrens, and today I had a tough day. I've been working all day on a plan to submit a petition to the House of Commons to make a change in the All Day Security Act that I will share with you on the next video. Actually, it was going to be this video, but a client called me and I said, no, I have to record a video on this topic because the accountant recommends my client to make a deposit into RRSP to save taxes, which is a terrible idea. And because the client will retire at the end of the year. She has no time to withdraw that money from RRSPs before getting the guaranteed income supplement. So the RRSP will definitely one day reduce her guaranteed income supplement and be so costly. So here is what happened. Let me share with you. I will call this person Michelle, and here is what happened to Michelle. She will have an income this year of $70,000 from employment. Michelle is still working until December, will continue to work. And she also withdrew $8,000 from her RRSPs on my advice. She received $6,000 from the Canada Pension Plan during 2023 for a total of $84,000 of income. So her marginal tax rate, and this is so important, this is the tax rate that we pay on the last dollar that we earn. So her marginal tax rate is 30%. This means that if Michelle follows the accountant's advice and deposits, say, $10,000 in RRSPs, she will save $3,000 in taxes or 30% of the 10,000. But here is what happened. Let me show you now what will happen to Michelle when she retires next year or whenever she withdraws that RRSP. Michelle has 38 years of Canadian residency. She doesn't have the 40 needed to maximize the all-day security. So her all-day security will be a little bit less. This is the rate for March of 2023. This changes in April will increase, but this is the rate that we're dealing now. If Michelle happens to be retired now, we will see what happens if she makes her RSPs withdrawals. She also received $493 from Canada Pension Plan, and she has $830 here of an employer pension. So, all day security, Canada Pension Plan, employer pension. Given these are the numbers, she qualifies for $241 of guaranteed income supplement for a total uh, government pension of $1,387 and a total monthly pension. This is the money she will receive, $2,217. Now, what happens if Michelle decides to withdraw $800 per month, which is 9,600, almost the 10,000? From RRSPs. So RRSPs and employer pension are the exact same pension when it comes to pensions. So we will increase this by $800. So it will be 1,630. So if we have 1,630 here, then her guaranteed income supplement is gone for the year. The 241 are gone for the year. And she will receive a total of $2,776. But this is taxable income, and her $800 that she receives every month will be taxed at a minimum tax rate, 20%. Remember, when she deposits the money to her RSP, she saves 30%. Now she's withdrawing the money. The accountant is absolutely right. She's paying only 20 cents on the dollar, 20%. But she lost the whole guaranteed income supplement, which represents another 30% of the 800 that she withdraw. So the 30% guaranteed income supplement plus the 20% in income, now Michelle is giving back to the government, say, 50 cents on the dollar or 50% of the RRSP withdrawal. You may say, well, but she doesn't have to withdraw the whole amount on the first year. Well, we can spread it over 4 years and make, say, $200 per month. Okay, well, instead of 1630, will be $1,030 per month. The 830 from employer pension plus the 200. So now we have $141. Still losing 100. We add $100 of RRSP money into her income, and she lost $100 per month of guaranteed income supplement the following year for 1 year. So no matter which combination we look at, so at all times when Michelle withdraws money from her RRSP, withdraw at the retirement time, it will end up costing at least 50 cents on the dollar. But I'm not the only one saying this. This is a document from 2003 that was written by Richard Shillington. Here, Richard Shillington has a doctoral degree in statistics and has conducted research on health and social and economic policy for over 30 years, and this is from 2003. And back then, Richard Shillington wrote that that all the financial community and the governments are recommending RRSP. However, for many lower income Canadians, and this is key, guys, this is the reason why many people refuse to talk about this because nobody wants to be called lower income. But fact of the matter is that if you qualify for the guaranteed income supplement, whether because you forced it or because you qualify, so you're considered low income. And but for many lower income Canadians, RRSP are a terrible investment. They are victims of a fraud, however unintentional. So, and he says only, think of it, he said this back in 2003. Only when more Canadians are aware of the perverse treatment of lower income citizens, savings will Ottawa be forced to develop measures that reward rather than punish their savings effort. And Ottawa listened. And in 2009, guess what happened? They announced the tax-free savings account, which is the type of account that where this type of Canadians they will qualify for the guaranteed income supplement should be saving. But this is not only myself and Richard Shillington. And here is why accountants are not are recommending this when the same David Trahir, CPA, Chartered Professional Accountant, and Chartered Accountant. He's a personal finance author and a speaker. And I highlighted a couple of things here. He talks about RRSPs. Don't invest in RRSPs when you are paying little or no tax. But furthermore, for every dollar of RRSP or RIF withdrawals, the GIS will be reduced by at least 50%. And he goes further on to talk about when an RRSP makes sense, especially at retirement, because I'm highlighting this, which is not part of the conversation. But every time I talk about this topic, some people tell me that I'm crazy, that doesn't work, and it does work. Like if you are at retirement, already 65 or over, and receiving little income, if you receive an income that is just above the GIS or receiving very, very little GIS, well, then probably making an RSP contribution will be a good thing because you will reduce your income to GIS territory. And guess what? You're going to get 50 cents on the dollar. So, like, very rare when you get 50 cents on the dollar while you're working. So, this is a great strategy that you can use. Well, enough of RSPs for today. I want to go to the next video that I will talk about my petition to the House of Commons. But as always, don't forget to subscribe to the channel and hit the little bell there just to that you want to be you don't want to miss the following videos because we're going to talk a lot about this petition to the House of Commons. And if you have any questions, you can always ask on the descriptions of the video below the video or in the comment section or send me an email to this email address that will be also detailed on below the video. And other than that, thank you for watching and I'll see you on the next video in a few minutes.